we're very focused as an organization on arranging project finance, asset level financing solutions, primarily to carbon removal projects.
Hi, everyone, and welcome to Climate Tech 360, where we connect with diverse voices in the climate sector to make informed choices in supporting the future of climate tech. I'm your host, Samia, and today I'm speaking with Martin Kessler, Chief Business Officer at Flowcarbon, a vertically integrated financial services and technology company working to expand access to carbon finance solutions and the market for high-integrity carbon credits. Martin has more than 20 years of investment banking experience. Previously, he was at HSBC in New York and London for the past 11 years, where he built and led regional and global sales businesses focused on derivative and structured credit solutions. He's also held senior roles at Bank of America, Lehman Brothers, JP Morgan, and currently serves as an advisor to Capture 6, a direct air capture company. In this episode, we get a seasoned investment banker's perspective on the financing gap in the carbon removals market. And we delve specifically into the part of Flowcarbon's business that is working to bridge this gap. We talk about how Flowcarbon works with removal startups and private credit lenders to help startups raise project finance, the timelines in securing asset level financing, and which carbon removal technologies are best suited for project finance. And now onto the episode. Martin, welcome to the Climate Tech 360 podcast.
Pleasure to be here.
I wanted to start off with Flowcarbon, just very general, high level on what you do and specifically your role there.
Of course. So Flowcarbon, we like to call ourselves a vertically integrated carbon finance company where we are focused on three business lines. The first is project finance. We're very focused as an organization on arranging project finance, asset level financing solutions, primarily to carbon removal projects, which is business line number one. Business line number two, we refer to as carbon development. And what that means is we work with a fantastic network of project developers who, among the revenue streams of their projects, is generating carbon credits for the voluntary carbon market. And by carbon development, what we mean is we help them get through the carbon credit issuance process, working with Vera, working with Gold Standard, working with Puro Earth to make sure that the ton that they are claiming to remove from the environment is validated as a ton of a carbon credit, which can be purchased. And then our third part of our business is carbon credit sales. We work with a universe of about 300 buyers of carbon credits globally and help them procure tons for their net zero goals. And that's primarily a corporate focused buyer base globally. My role at the organization is I'm the chief business officer. So I am responsible for all the revenue generating activities at Flowcarbon and ensuring all three of those business lines are optimized, are performing, and then also importantly, thinking about new business lines or deeper aspects of each of those business lines so we can grow our footprint.
Okay, great. I think I have a full picture of what it is that you guys do. It's tough with startups, right? Because I researched sort of your press releases. I listened to some of the podcasts early on, and you guys have only been around for about 2.5 years, right? Less than 3 years. So obviously there's been an evolution there, right?
100%. I joined the organization in March of last year when I had the pleasure of meeting our two co-founders that are in operational roles at the company. And they were keenly focused through their earlier work about how to unlock this question of institutional grade financing to the carbon markets. So you spend so much of the first few years of the organization thinking about this exciting market in the voluntary carbon market, which has started small, kind of had this rapid rise. It's now petered out a little bit and flatlined, which we can, of course, talk about. But through that entire process of building a young company, identifying that the way that this market is going to be successful, decarbonization, carbon markets, is really about unlocking institutional capital. So I was really fortunate to come on board just as that question was being asked and help them build the infrastructure to deliver the answer.
The reason I wanted to chat with you specifically was, well, you and I met a couple of months ago at the Greenfin conference. We had a workshop on project finance, and I was running that ECDR portion, and you were part of that. And you have like 2 decades of experience. You were formerly a managing director at an investment bank. So you have real banking, institutional experience, which you don't see a lot of that in the startup world. So I'll ask you a little bit about that later, but tell me what your journey's been like, because I would imagine it's been very similar for all of us, where we have exposure to a lot of these early stage startups, and we're all trying to figure out together how to get the right type of financing for them.
Yeah. So my journey, as you pointed out, was 24 years working in sell-side investment banking. I was very fortunate to have the ability to work in senior leadership roles, in fixed income markets, capital markets roles, building regional businesses, global businesses, always customer facing. So always with an eye towards helping corporations, private equity firms, infrastructure funds tackle some of the more ambitious capital raises that needed to be happening in the market, some of the more complicated risk management problems in the market. And that experience has been unbelievably valuable to what I'm doing now, because it gives you both the geographic reach of different types of customers, as well as the network, as you know, in banking, of all the people that you meet. After 24 years and after COVID, I was very fortunate to just think about what I wanted to do as a second career, and took a little bit of time off to contemplate that question. And literally within 30 days of leaving the investment banking industry, got a phone call from a very good college friend of mine that says, "Hey, you probably don't know anything about direct air capture, and I know you've just not been working for a month, but would you mind talking to this amazing CEO co-founder?" And I picked up that call and I spoke with him numerous times and just began this learning journey, quite frankly, about this wonderful industry that requires huge amounts of capital to be successful. It's not optional, as we know. Winning in this space has to happen. And it was through that journey that I really started to sense that my ability and my network and the professional services that come with it are not servicing all of these fantastic project developers that are out there. And it was really through that first experience that I got to know about the carbon markets. And then, really personal reflection was thinking about, well, how do I build on this experience to really unleash the skill set, the power of my network, the value that I've been able to add in the past to more established corporations? And it was really more in a financing markets context. And it was through that journey, I was really fortunate to be introduced to Dana Gibber, our CEO, and one of our co-founders, who happened to be asking that same exact question just at the same time that I was thinking about it. And then we embarked on this kind of 3-month thought leadership experiment where we were just exchanging different ideas about how to effectively tackle this problem. And what I realized through that process is the only way, in my opinion, we're going to add value to tackling this problem is by recognizing it's an interdisciplinary skill set of different experiences coming together to really think about these problems in a new way. So Dana was a proven entrepreneur that had founded a company and started it. So has that very keen awareness and intelligence and direction and leadership to deliver successful organizations. I was the experienced investment banker that knew the world very well, that needed to learn from Dana's world. And then Dana also knew she needed to learn a little bit from my world. And we just started iterating, and hopefully we'll spend some time today talking about what we came up with.
So you talked about the 3 pillars, the project developers, helping with the verification process, which I think is quite well covered, or at least it's a subject that a lot of people are talking about or have been talking about for a while. And finally, the carbon credit sales. But I really want to focus on the project developer side and the project finance. Before we jump into that, I'm just curious. So you said you went down this 3-month journey and then you came to this decision that it's very much an interdisciplinary skill set, which as early stage investors, we've all realized that, right? This is not like, when you're making investments into early stage climate tech companies, it's not like making investments into B2B software companies, right? So there's so many different elements. There's the science portion of it, there's the financing portion of it, and then there's like the engineering and scaling side of things, right? So how did you, in those 3 months, like How did you come to that conclusion? What made you think that?
So I think that the fundamental, or I should say the organizing principle of how we all started talking to each other is financing. So I think it's very important to just identify that that is the bedrock of kind of how we've grown the organization since I joined. And when it comes to financing and being an avid listener of your podcast and all the different stakeholders that have come to your show, it's really about building the capital stack. And it's really about understanding all of the different ecosystem participants, the role they play in that capital stack to get to a successful transaction. Now, when we're wearing our investment banking hat, working in traditional financial services, we all know we have industry verticals, there's analysts, there's expertise, and there's diligence. The carbon world, in terms of the DMRV providers, the insurance providers, they're just another industry vertical in my mind, the similar way that an investment bank would set up its actual operations. So you need a bit of in-house expertise to show that you have the thought leadership and the experience to deal with it. But we also partner with many fantastic organizations in the ecosystem that do exactly what you said. They specialize in those services. So our role is to be smart enough and experienced enough and well-staffed enough that our clients have confidence in our ability to give thoughtful recommendations and solutions to their problems, but also to demonstrate that if we don't know the answer, we know the best people that do know the answer. And so it's this hub and spoke model that we've been really focused on building. And, I think it's critically important to have that self-awareness as you're building a sustainable business.
Got it. Okay. So talk to me about the project finance side. How does it work at Flowcarbon? Is in my early stage, maybe let's not super early stage, right? Because then I wouldn't be ready for project finance. But let's just say a few years in, and I don't want to use the example of biochar because I do think it's very appropriate for project finance. So we'll get to that later. But let's just say I'm something else, like a direct air capture company, and I want to raise some project finance. I've already done a pilot project. I got some funding. Do I then go to you? Do you find them? Do you bring in bankers? Like, how does it work from beginning to end?
Yeah. So the way it works is we are, as we talked about at the beginning of the show, our organization is rooted in the carbon markets. So whether it's through our team that sells carbon credits, it's whether it's our team that works with carbon developers to get their credits issued, now our team of financing professionals that actually are responsible for structuring these transactions, our team of originators that are going out into the market to find projects that are great candidates for those three services. We effectively start by putting ourselves out there in the market. And what that means is we attend conferences, we attend carbon markets conferences, we attend biochar conferences, we attend direct air capture conferences, and we start to meet people as much as we can and understand exactly where the market is around these developers. And we talk to everyone because we have a very strong belief that there is a community and a profile of projects that are ready for project finance solutions today, but we're also pragmatic and we understand that there are many that are not, but will be one day. That could be a year from now, 2 years from now, 3 years from now. So you mentioned direct air capture, which is a critical component to solving our climate challenges ahead. What direct air capture, what enhanced rock weathering, what biomass solutions all share in common is they're capital intensive. They are very capital intensive in terms of the amounts that they need to raise to be successful. So a conversation with a direct air capture developer can be really getting to know their business, really understanding that sometimes they have multiple revenue streams, sometimes they have one revenue stream, and getting that core understanding. But we oftentimes will tell the projects, this is an amazing idea. You're probably a year or two too early for project finance. But we're religious about putting 6-month reminder calls in our calendar with those projects. So we always check up with them, hear how they're doing. And then at the other end of the spectrum, there are other pathways which are a bit more ready because the technology is there. And where the real work has to happen at this point is the construction of the capital stack. And this is where we really see the value, and I'm really looking forward to getting into that.
Okay, so tell me about one of those projects, and it could be a biochar. So it's not off limits anymore. Yeah. But you are a banker and you have a team of bankers. Do you operate in the same way that an investment banking group does when they're looking to issue project finance for some of these deals?
I think the short answer to that is yes, we view ourselves as effectively providing the same level of service, the same level of experience, the same level of analysis that any top investment bank would to the project developer community. And the only reason the investment banks, or one of the reasons why the investment banks are not focused on it, is very understandable. These are smaller projects in newer industries. And as a result, it's a little bit early for those institutions to be part of the solution. So the way we work, to pick up on your question, and we love talking about biomass and we love talking about biochar because we view it as a vertical that is very ready for project finance, is I'm thinking back to earlier this year. Me and my wonderful team of colleagues planted ourselves at the U.S. Biochar Initiatives Conference in Sacramento in February this year. We met with at that specific conference, dozens of promising project developers. We visit in the exhibition room, the tables where they're showcasing their pyrolysis machines, and we hear about exactly how they're bringing their projects to market. And what we were just so impressed by in meeting these wonderful developers was how much experience they have in their field in terms of really understanding what high quality biochar looks like, their ability to work with pyrolysis technology for a number of years, their ability to put some demonstration facilities out there where they can prove they've made it. And the thing about biochar, which is so fantastic, is that it's a well understood and proven technology. And so when you think about the importance of institutional capital and where institutional capital can really cut its teeth productively in terms of raising capital, it's with proven technology. And this is really one of the linchpins that we started to focus on. And at the same time, we've been spending all of our time working with wonderful organizations like USBI and the International Biochar Initiative. We started talking to private credit investors. And this is the experience that myself and my colleagues bring to the equation. Hundreds of private credit investors, and really understanding what are their criteria to deploy capital into markets like the biochar market so that we could be as thoughtful as possible when we identify opportunity. And the journey along that entire pathway is exactly the same journey that you pointed out at the beginning, like investment bankers do. We get into the data room. We look at the financial models. If there is no financial model, we build one. We look at the strength of the contracts. If they're good contracts, we get more excited. We also, though, at the same time, understand that things are not always ready for financing today, but they can be ready for financing in 3, 4, or 5 months if you do the right things. And what are some of those right things that we can help bring to the table? It goes back to my earlier comment about the ecosystem and the ecosystem participants. There are wonderful insurance companies out there, both in the carbon markets and the markets more broadly, that are innovating all the time to see how they could put their services against financing arrangements to get investors that much more comfortable with investing into these promising companies. So data room, diligence, financial analysis, developer interviews, quite frankly, spending lots of time with them, site visits. All of those things are things that we do. And the last thing I'll say, because we are a young company, we don't have teams of hundreds of people, is we're really thoughtful about where we spend our time. And so we have to really understand that the contours of the project lend themselves to a successful outcome. We're just absolutely thrilled that there's so many terrific developers out there, and our ability to kind of insert ourselves into that ecosystem and help generate value.
How long does this process usually take? I don't know if you had a chance to listen to my very first episode. It was with Jeremiah Lin, who's at Barclays. He said sometimes it takes 18 months for them to do due diligence. And that's a long time for some of these startups, right?
Yeah.
And I can completely understand why that's the case from an investment banking perspective, right? And they're using their own capital and their own balance sheet. What is a typical, if you could give me an example of a project that you've worked on from sort of beginning to end, bringing in the private credit guys, the role that you guys have in vetting and then working with private credit to, I don't know, potentially closing. I don't know if you've had any closes yet because you're a young company, but yeah, I'd be interested in hearing about that timeline.
Yeah. So I think the first answer to the question is it can be as short as 6 months. It can be as long as 18 months. And so I think those two bookends are probably very fair. I think the benefit that we bring to the ecosystem compared to some of the larger investment banks is we're not afraid of doing deals that have smaller initial sizes. And as a result, it sort of allows us to dig in very quickly and very deeply with project developers who may be underserved by some of the larger financial providers in the market. But let me give you an example to bring this to life, because I think it will really help demonstrate to your listening community the types of projects that excite us. So I would generally say that we can accommodate and facilitate very large transactions up to the hundreds of millions, mostly because our investors have lots of capital to deploy. But I think when we're looking at the community of biochar developers, many projects typically have a $20 to $30 million CapEx requirement that has to be serviced, typically associated with a second facility, or maybe a demonstration facility has worked and now they want to get the proceeds in place for the first facility. So that's kind of representative of a first transaction size that we see a lot. The profile of a company that we like is a company that uses feedstock that's proven to work. This can be agricultural waste. It could be sustainable wood waste, things of that sort. The other factor we really look for in companies is robust contracts and ideally multiple revenue streams. So with respect to the business operations of these developers, when you go through the pyrolysis process, as you are well aware, you typically produce three things. You produce a solid, you produce a liquid, and you produce a gas. And the pyrolysis machine can be shaped in a way to kind of change the amounts of those outputs, the balance of those outputs, and the commercial revenue model. One project profile that we really like has excellent access to feedstock, where they can enter into multi-year contracts if necessary to ensure financing providers that the feedstock is there. Two, they obviously have to produce biochar at a very durable quality such that it is trapping the carbon that it's aiming to trap. And it also can be used commercially and successfully into new and developing markets. And we're very pleased to see the development of certain market participants that can actually put commercial prices on those biochar, can put tenors of purchasing duration into the market. And that obviously is a commercial revenue stream. And then the developers can get very creative around things like the gas and the liquid. We work with some developers that have really identified the commercial opportunity to generate renewable power on the back of their pyrolysis activities, and using very standard proven contracts like power purchase agreements to sell that power back into attractive jurisdictions that will put compelling pricing on the actual power that's being sold. We've seen other developers look to produce the oil and sell bio oil to the market at financeable contract profiles. And then, as we all know, all of these, I shouldn't say all of these projects, but many of these projects are very focused on carbon credits. That's typically how these developers are now viewing the reason to really lean into biochar in a way that they wouldn't have 10 years ago, because you didn't have carbon markets 10 years ago to support the investment proposition. And I think when it comes to the carbon markets, we are so appreciative of phenomenal ecosystem participants like Microsoft, who've demonstrated a real commitment to support these projects with long-term offtakes. We need a lot more of Microsofts in this community to really catalyze this market. But I always tell my team, when we're working on transactions, our role is to demonstrate the actionability, the power of now for the private market community to come into these transactions and show it can work. But we have to work with what the market gives us. So if the market at the moment is giving us financeable contracts, we work with those contracts. If the carbon credit offtake community hasn't quite got to the point where it can support asset level financing, Dana and I talk about this all the time, we have to be great champions of the carbon market to help drive that adoption, but we also have to really think about what a successful transaction looks like and be supportive of our developers on their carbon credit journey, but focus on the contracts to get the asset level financing in place. So every day when we come to work and we're engaging with the market, these are the things we're thinking about. And this is kind of how we're building the value proposition that we're delivering into this market.
Got it. Okay. So when time frame could be 6 months plus, you source some of these deals through your own networks, through these conferences and things like that. And I guess as the market has greater familiarity with Flowcarbon, you're going to get even more inbound stuff. I don't think you're ever going to run out of deals to look at. And then what? When do you get the private credit guys involved? How did they do their due diligence? How long does that take to close, et cetera?
So the private credit, we always tell our developer community, you don't want to be too early in going to the private credit investor community, because if the idea is too unformed, if the contours of the transaction are not yet at the point where it's financeable, you don't get many bites at the apple to hold an investor's attention, because investors want to deploy their capital. So I think once we get to the point with a developer where we have comfort that the deliverability of those aspects of the transaction that I just mentioned are there, as supported by a financial model, which we may spend weeks helping them develop, as supported by a data room of contracts that we believe are financeable, as supported by the necessary insurance. Sometimes it's general contractors. Sometimes the beautiful thing about biochar is that there's so many shelf-made kits already that you don't need turnkey EPCs all the time to get private credit investors off the ground. I would say once the data room is to a point where we feel it's workable and can really hold the attention of an investor, we get there. I'd say that's probably from a time we identify a project that we're excited about, it's probably a 4 to 8 week journey to probably get the investor readiness to that point. And to be fair, it's not the case that the transactions are 100% figured out by the time we bring it to a private credit investor. But we like to think it probably hits that 80% threshold with a high degree of confidence. And if there's some gaps in the financing, we also know that and a lot of the financing community will relate to this. If you have an indicative debt term sheet in hand from an investor that demonstrates a level of seriousness about pursuing a transaction, it can unlock some of the other parts of the capital stack that may be waiting just to see if that debt capital can be provided. So that's how we think about readiness of a project.
Can you elaborate on that? The other types of capital?
Yeah, so for sure. So I think when projects come to us, we like to already have confidence that the developers themselves have spent some time and spent some money trying to get their ideas to this point. So we as an organization typically don't get involved in things like topco equity and holdco equity, early stage capital. There's a wonderful community of investors that are servicing those parts of the capital structure. But sometimes at the project level, there is a need for project equity as well. So I think in a perfect world, we want to be very thoughtful around structuring the leverage around the contracts that are financeable, whether that's 60% leverage, 70% leverage, potentially even 80% leverage. That's where the real financial engineering and structuring gets in. But there is that 20, 30, 40% equity gap. And oftentimes the developers will have ideas as to where that equity can come from. It's just knowing that the debt is there to help catalyze that equity moving forward. Our expertise in the ecosystem is really around private credit and private loans, but we also appreciate that all these parts have to come together for a successful transaction, and we're mindful of it. And where we can add value, we like to be helpful to the developers in realizing their vision.
Got it. Okay. So you're kind of effectively running it like an M&A process in a way. I used to work, my first job out of business school was at Jefferies, and we did middle market deals for tech companies. So typically venture-backed companies. And so I guess from beginning to end, you identify, we would do like a beauty contest and pitching, but let's just say you have the startup, then you have to get very involved with their financials. When you're dealing with like $1 billion fundraise, it's a totally different situation. But with middle market companies or startups, you are creating their models for them. And then you're doing the data room, et cetera. And then you bring in the buyers. But in this case, it would be private credit guys. And in conjunction with that, they would probably be raising a round of equity, probably likely from their previous investors who did their sort of pre-seed, seed rounds, who are just waiting for that debt commitment to come in alongside the equity. Is that right?
Yeah, you said it perfectly. I think if this market is going to realize its ambition, the process has to work that way, because the capital that is effectively waiting to be deployed into opportunities like that, it's used to being deployed in a certain way. And it has sort of ways of investing as determined by the professionals, as determined by their investment mandates. And this is a balancing act where we have to do the best job that we can as a community to present these projects in a way investors are used to investing. And at the same time, the investors, and there are some terrific private credit investors that have done sustainable infrastructure, have done waste to value. They may have heard of biochar, but because they're doing stuff in renewable natural gas and it's not that far removed from biochar. But they're like, you know what? Yeah, let me spend a little bit of time and dig into this. I like how you guys are thinking about the problem, and I can actually see this working. And so I think there's also a wonderful sense of desire from some of these private credit funds, if presented with the right transaction, to take the time to learn. And they should be given a tremendous amount of credit, in my opinion, for going on that journey together with these developers and with us. But yes, the way you framed it is exactly correct.
Absolutely right. We need more of these private credit folks involved. And obviously there's a higher level of risk than what you're typically used to for that asset class. But I think with folks like you coming in with the experience that you have and the experience that your team has and all the due diligence and the vetting that you're doing ahead of them coming in to look at the deal, that should make a massive difference. So it's really important work that you're doing. From a Flowcarbon business model perspective, how does this work? Because I remember at Jefferies, I had friends that were working at Morgan Stanley and Goldman, and they would do one big deal or two big deals, and they'd be done for the year. And we did much smaller deals, so we would work on more deals. But it would actually even be more work sometimes because, like I said, you're going in and creating the models for them, going through all their financials, doing all the due diligence. How does that work for you guys? What does that mean in terms of the work flow and size of deals and number of deals?
Yeah, my wonderful colleague at Flowcarbon, Will Higbee, who runs our carbon banking and markets practice and is a tried and tested project finance professional with an exemplary CV. He reminds me often, Martin, it's just as much work on a small deal as it is on a big deal. And
more
I think
work.
that, correct, it could even be more work. So the way it works is we spend a lot of time really thinking about the projects that we take on, because we want to take on projects that we believe have a terrific chance of success. And the way we've effectively set up our model is it's success-based. So when the developer is successful in realizing its goals and its ambitions, it's a successful transaction for Flowcarbon as well. And it is absolutely essential at the early stages of markets like biochar, like the carbon markets, to have that alignment. And our clients completely see that at the end of the day. We recently had a conversation with a developer who is really being thoughtful about their scaling ambitions into different biochar markets. And it's sort of like, oh my gosh, I have found my investment bank that also understands my market. Like, what am I missing here? And so these are the types of, I guess if we want to use a startup-y kind of lingo, product market fits that super excite us about the value that we could add to this ecosystem. And what's beautiful is that if we as an organization have a lot of confidence that our clients are going to succeed, and our clients have a lot of confidence that we can succeed, it just breeds this desire to work very, very hard and to stay committed to excellent commercial outcomes. And the second thing I would add to that is, with respect to the financing part of the capital stack, it is the most underserved part of the success factor of all of these companies. But we love the fact, back to what I said at the very beginning, that we're vertically integrated. So we can help them with their carbon credits through the Puro process if that's what they choose to do. We could help them with the most established buyers. And what we're also super excited about, and I touched on this a little bit as well at the beginning, is the new market opportunities that we're uncovering for ourselves that also help our clients. And to give a couple examples of that, we keep coming across the value of IRA tax credits into this new market. It is a wonderful development that the market has been working through over the last 2 years once the IRA has come into play. But the same advice and the same support that developer needs for their financing, they need it in the tax credit markets. And we're also starting to discover through our business model that some of the more established business units that have been out there for some time, like renewable natural gas, we can add value there too. And what is the reason we're able to bring all of these different versions of financial services to bear? It's all about having, in my opinion, one, the right culture of an organization that brings and attracts the talent that can unlock these very tricky financing problems. And two, the network and the community of individuals that the team brings. And so as we think about our model and our success, we sell credits, we help developers get their credits issued, and we align ourselves with our developer clients in terms of helping them realize their ambition.
And hopefully, as the private credit market matures more in this space as well, you can work on that side too. So in the same way that M&A bankers work to represent sellers and buyers, you can work both sides, and you'll be working with private credit guys who are like, we've spent 3 years in biochar. We're looking for projects that have XYZ requirements. And then you can work that side as well.
100%. Through this journey, we've identified a few areas of opportunity. So for example, just to throw one out there, environmental commodities markets are big. Voluntary carbon credits are one form of credit that is out there in the market. There are compliance credits. There are other forms of credits. We've seen some really exciting opportunities from financial players who provide long-term offtakes for certain types of carbon credits and marrying those into the financing plans of our developers, whether it's renewable natural gas, for example. And what's the value that we're really bringing to the system? Well, the value to bringing to the system is the 20 plus years of experience that Will Higbee has, that Martin Kessler has, that the team that we're building has, and saying, wait a second, we could just call that person. That's what they do. And that developer can kind of use that, right? And so these are the natural connections that really excite us. And I think we are starting to see with the institutional investing community a desire to work with players like ourselves to help them be more productive with deploying capital into areas that they're set up to win.
Got it. Okay, great. So before we wrap up, there are two more questions I wanted to ask you. Not to put you in a bad place, like picking favorites within the removal sector. We talked a lot about biochar, why it makes a lot of sense for project finance, the multiple revenue streams. That's not the case for a lot of other carbon removal technologies. So I was wondering if you could give sort of a sense for some of the projects and technologies that you think are appropriate for project finance and some that maybe aren't ready, or if there's a spectrum where some of these technologies aren't in the spectrum.
I'd be happy to. So we believe there's tremendous potential in rock mineralization solutions, things like enhanced rock weathering, similar to biomass solutions. It is when you talk to investors, institutional debt investors, about things like ERW, they've never heard the term ERW before, many of them, but once you sort of explain it, the elegance is the simplicity of it, the scalability of it, the sort of proven technology component of it. And we stay very close to many wonderful companies in that community because they're starting to make tremendous progress with material carbon credit offtakes. And several of them are also starting to produce insetting solutions with a level of seriousness that in and of itself does present financeable contracts. And so we're super excited to partner with those projects as their plans become reality. We talked about it before on the direct air capture side, we think that there are some just tremendous developers out there that have kind of cracked the multi-revenue stream code within carbon removal. And the great thing when you talk to many direct air capture developers is like, you don't need to tell them that they're not as ready for project financing as they are. They know it, but they want partners now really thinking through what they can be doing to best position themselves to get that capital when it is available. And we're pleased to be in discussions with dozens of them, knowing that the commercial opportunity is a little bit further down the line. We haven't spent too much time in the ocean-based CDR space. I think that's probably a bit earlier relative to some of the others, but we keep our hands in all of those cookie jars because there's just really, really great opportunity there, but the timing's going to be different when it's realized.
Luckily for direct air capture companies, there's a lot of interest from oil and gas. So they are still able to raise those massive equity rounds that they need to scale. Ocean-based solutions, it's trickier, and the multiple revenue streams also early days. So yeah, we're figuring that out. Yeah, but that's important. So this is a bit of I guess, more on the personnel side of things. But I'm curious because you're an ex-banker and you have a whole team of ex-bankers. How do we get more people like that into this side of the business? I mean, we have the same problem with people who are working in energy trading or oil and gas or fossil fuels. Those expertise are really needed in this industry, but they have good, I don't want to say stable because it's never stable, but good, high paying corporate jobs. And they're used to working in large institutions with unlimited resources. And this is like the wild, wild west. So how do we get more people like you onto this side?
This is probably the most important question. And this is what Dana and myself and other senior members of Flowcarbon think about with increasing regularity as we're proving concept in what we're doing with the first movers that have come into organizations like ours and demonstrated the power of the market. Let me answer that question by maybe sharing why I joined. And then I think I could probably give a great reason into doing this. This opportunity is not right for every banker or every sort of individual that comes from it. There are certain profiles that I think are set up to be super, super successful. Banking is a fantastic career. It gives a skill set that's unbelievable. It gives you real deal-making experience that can't be compromised. You've been in the worst situations. You've been in the best situations. You've seen absolutely everything. But one thing that I was really excited about the opportunity of doing was being part of creating equity value at a new organization and something that's truly, truly special. And I think there's a lot of great performing stocks out there and there's a lot of wonderful equity stories. But I think individuals in banking really need to feel that alignment and that desire to build something special. The second, I can tell you, and I within the bankers that are maybe listening to this show, some of the people I have come across in the industry are phenomenally talented. They're brilliant. They see ways of solving complex financial problems, but they also have an entrepreneurial spirit and a can-do attitude about it that can sometimes be a little bit more restrained at larger, more bureaucratic, more institutionalized organizations. And so maybe you see an area of commercial opportunity, but the thing you're doing is working so well that there's not a lot of institutional support to kind of branch into that new area. So we're really focused on those bankers that have huge confidence in their commercial abilities, have a huge desire to be part of being part of a new financial services ecosystem, specifically around things like the decarbonization economy and carbon removal. And you would be surprised, I think Dana and I are surprised all the time when we talk to people, how much keen interest there is to think about platforms like ours. And we do think in the long run, it'll be a very strategic, hand-picked group of individuals from that community, which will make the difference in terms of helping all of these fabulous projects reach their ambitions and also helping all of these investors successfully deploy capital that they're seeking to deploy. So if any of your listeners out there are working in this community and are interested about what we do or have ideas within our ecosystem as to how they could add value, we'd love to hear from them.
Flowcarbon also had the benefit of raising a very large round. So they were able, or you were able rather, to hire people like you and a team like yours. Like when I look at other hardware, hard tech startups that have raised small rounds, they don't have the ability to hire finance professionals. So that does give you an advantage.
Yeah, it's our identity, simply put. I mean, we very much view ourselves as a organization dedicated to unlocking investment banking, investment bank boutique advisory, however you want to put the name on the cover to that end. And the co-founding team has had a tremendously prescient and sort of, I would say, savviness to know that these are tricky markets. And when you see areas like the areas we've been very pleasurably discussing over the last 40 minutes, come to be really thoughtful about having a financial plan in place to help the company realize its vision. So we're really fortunate that our financial position allows us to have the time and the space to build and create these markets. And yeah, we're super excited to see where it takes us. And then I would just say to the private credit investors that are out there, to the projects that are out there, we get lots of inbounds. It's always wonderful to hear from anyone and everyone how they want to participate in this ecosystem. So we'd love to be helpful to more projects. We'd love to be helpful to more investors. And we're here to do great work. So thank you.
So to call to action to any former bankers or people with that kind of skill set that might want to join your efforts in mitigating climate change and actually building something from the ground up, which is super rewarding. Call to action for private credit folks who want to diversify their portfolio and be more involved in carbon removals, and as well as finally to startups in the removal space that want to raise project finance.
That's right.
Great. Well, thank you so much, Martin. And that is it for today's episode of Climate Tech 360. If you found this episode useful, then please subscribe and leave a positive review, as it makes it easier for people to find the podcast. Thank you for listening, and I will catch you at the next one. Bye, everyone.